Hey guys, this is Umar with you, and I hope you are all doing great. Now, as I talk to you, if you see last Friday, US market crashed heavily. In fact, Dow was down by more than 1000 points. The lowest point of Dow was more than 1000 points. Now, what is going to happen on Monday is that Nifty is going to gap down. Now, where it is going to gap down, whether it is going to gap down below 17,000 or it is going to gap down above 17,000, that we really don't know. This is a very it's a weekend process and we really don't know what is going to happen. Now, as I talk to you, SGX Nifty, even though Dow US markets were really very hit very bad, SGX Nifty was not showing that much of a big negative points. So what is going to happen? See, had you taken a straddle, had you taken a strangle on Friday, believing that markets may be stable, which is not happening nowadays, in case the market opens gap down, what are you going to do? Your straddles, your strangles, which you might have taken on weekly options or monthly, not monthly options. I'm sure if you had taken some straddles or strangle on monthly options, you might be having some buffer. But in case you are taking had you taken a strangle or straddle or any non-directional strategy on a weekly options over the weekend last Friday, then you're going to be in trouble. So how do we manage these kind of gap downs and gap ups, right? So these strategies was being shared with our app members. So we have a dedicated app where you can see these type of strategies. These are all premium strategies, or it is a very good strategies which you will not find in social media. Anyway, I will explain how we manage. I'll show you an example, like at the beginning of April series we had a gap down and how we manage. In fact, we had a straddle, we converted that into a strangle, and we closed that position in a profit of around 1.5% in a week. So that's a decent profit, right? So total capital was deployed was around 2.5 lakhs. We made around 3.5k or 4k in just trading 3 lots. So margin requirement was not heavy, but also we try to manage that position and make a good profit. That's the objective of the strategy or adjustment. Now, once it is going to once it is going to gap down on Monday, what are you going to do? You are going to be hit emotionally. You are going to see a MTM loss. Your screen is going to be all in red. So what are you going to do? So that's why we are here, and we will explain what we have done in our previous example. Now, if you see this one, this is the thing which we had taken on 8th of April. So this is the strategy. So if you see this strategy, let me show you. Yeah, not this one, yeah, this one, right? Let me illustrate in a better way so that you can understand properly. Okay, this was the strategy which we had taken on 8th of April. Now this is a very simple straddle. What we did is we sold around 17,000. Let me get it clear to you. Yeah, we did a 17,800 call option, and we sold 17,800 call option and 17,800 put option. That is a normal straddle. And to hedge that position, we bought 18,400 call option and 17,200 put option. So which is kind of iron fly, but it's not iron fly. Since hedges are very wide, we cannot call it as iron fly, but you can name it whatever you want. Strategy doesn't matter. What matters is, at the end of the day, are you making profit or not? That is what is concerned here, right? So we did the strategy, and our break-even point was from 17,500 to 18,000. So upper break-even point we don't have to care, because I am bearish and I have been bearish for all these days, and I will continue to be bearish. I wouldn't be surprised even if the market hits 15,000 or below 15,000. So that's what is happening here. In spite of all this bad news evolving around us, HDFC, that and this, and I can see markets are not ready to go, or even FIAs are not ready to, FIAs, the market movers who are not ready to take the market on the upside. Every time the market goes on the upside, they start selling heavily, and that is what we have been seeing all these days. Now, if FIAs are buying, they are buying for 300, 400 crores, or reducing the selling pressure. If they do both of these things, what happens is market is rallying, and once the market reaches upside, they are selling. So let's get back to the point. Now, this strategy was a simple straddle, and break even was between 17,500 to 18,000. Now what we have to do is, if you see this chart, so this trade was taken on 8th of April. So 8th of April was a Friday, and 11th of April market gap down slightly. So it was not a major gap down, but next day it gapped down. So that's what I am taking you to. So next day it gapped down, and market even went till 17,500. So if you see here, if you see this one, our break-even point was around 17,500, but the market literally went to maybe 17,400 levels also. 17,000 low was around 17,457. So how do we manage? Now, if you ask me, had you are having a straddle with a break-even point below 17,500, why do you have to manage? The problem is you will have emotional problems when you see your put side going into trouble. It is easy to tell whatever, it is easy to show you in a sensible, or if it is easy to show you a payoff graph in sensible or upstrap, but when in off positions because of psychological or emotional problems, and that is why we had to do some management. Now what happened once we took this trade on 8th of April, on 11th of April market had slightly gapped down. So 8th of April close was around 17,784. On the next day, which is 11th of April, market gapped down and opened at around 17,740, around 40 or 50 points. That is not an issue at all. Managing 40 or 50 points, that too after a 2 days weekend, is not a problem. You are going to have theta decay, and that will be subsided by theta decay. That's not an issue. But what happened next day is, on 12th of April we had a good gap down. That is, on 11th of April market closed at 17,674, and on the next day, which is 12th of April, market opened at 17,584. So roughly around 150 points gap down. Now that was a significant gap down. 100, 150, 200 points, we consider that is a significant gap down. And if the market gaps down by more than 300, 400 points, that we consider as a big gap down. And we have been seeing 400, 500 points gap down, gap ups in the past 2 or 3 months. Markets are simply volatile, right? Now, how did we manage that position? Now, what happened is, once we saw the market coming down, so if you see here, yeah, this is the chart. If you see here from 17,000, from 17,500, it came all the way down to around maybe 17,000. One second. Yeah, where is this? Yeah, it came down to maybe 300 levels. Yeah, not 300 levels. I think, let me check. Yeah, when we did this strategy, market was around 17,700. Then it started coming to 17,600 or 17,650. So 17,500 was our break even. So what we had to do is, we just bought another 17,700 put option. So if you see here, we bought a 17,700 put option. 17,800 call and 17,800 put which we sold is a normal straddle. Now, since the market was coming on the downside, our 17,800 put was in trouble. To compensate the loss in that 17,800 put, we bought 17,700 put option. So once I did that, the strategy became something like this, right? Once this was done, we don't have any downside risk. No matter where the market goes on the downside, even if it goes to zero, in fact, if it goes to zero, we will make a good profit. So this is what we emphasize on our app, option selling app. So I'm saying it again, if there is a link on the description below, you can go and check the app if you want. We have very good premium content on that. So once that was done, even after doing that, market on the next day further gap down. So if you can see here, the next day also it gapped down and it went drastically on the downside, and we did some more adjustment which I am going to show you. So what we did is we did some more adjustment and we made it something like this. So our earlier break even was around 17,550. We brought it down to 17,400, and even had the market even gone below that, we would have done some adjustment. So from 17,800, the low was around 17,300. Market moved around 500 points and still we were able to be in a good profit with about 2.69 lakhs. So these are all the strategies, and if you ask me what adjustments we did, that's a trade secret. So you can download our app and you can check our app if you want. So there are a good premium content on our app. That's what I'm trying to say. See, everything cannot be told in social media. That's what I'm trying to say. If you want, you can download the app and you can check the adjustment yourself. So that was a good adjustment. At the end of the weekend, that is next Thursday, we made a good profit of around 3.5k with a capital deployed. It was around 2.69 lakhs. So we closed the trade with around 1.1 or 1.75% profit. Now, why am I saying this, or why I cannot say this, is because nobody says these kind of strategies. In fact, they would have told, but I don't want to see, there is no free lunch. That's what I'm trying to say. There is no free lunch. So you'll have to shred some. I have paid for what I'm doing now, right? I have paid a heavy fees for what I am doing. I have lost more than what you can imagine. So that is the point. So if you get free, you will not realize the importance of these things. So that's what I am trying to say. Thank you for watching. Take care. Bye.